Hello, I'm Tom Robinson. I'm Director of the Financial Planning and Wealth Management Program at the Costello College of Business at George Mason University. So today I'd like to talk a little bit about the financial planning and wealth management profession. Specifically, I'll talk briefly about the outlook for financial planning careers, and then I will drill down into some of the most common financial designations that you might consider if you have an interest in pursuing this career. So the outlook is pretty good. So in spite of everything that you're hearing about AI and the impact on jobs, certainly AI is going to make a lot of routine things that folks do more automated. It's going to eliminate some jobs where routine uh, calculations and those types of things, processes are done. But while it will certainly have an impact on financial advice, it's not going to replace, in my view, personal financial advisors, certainly not certified financial planners and chartered financial analysts and other professionals in this profession. Um, It'll have an impact on how we do business. It will help improve some of the things that we do, but it's not going to replace the human touch. We've had robo-advisors now for a couple of decades, and when they first came out, and a robo-advisor is basically where instead of having an individual personal financial advisor, you go to the internet, you log on, you answer some questions that are designed to measure your risk tolerance and what your investing goals might be, and then the computer creates an investment plan for you and gives you an asset allocation and tells you not only what funds to buy, but actually buys them for you and then periodically rebalances. And you can get that done relatively cheaply, generally about 0.25% of the assets that you're investing, which we refer to that as 25 basis points, which is pretty cheap. Whereas a professional financial advisor might cost you 1% of the assets that are being invested. Robo-advisors are pretty cheap, but you don't have a human that you can talk to, someone who understands your hopes, your dreams, your fears. You really need to have empathy. You have to be able to talk to an individual and help them in evaluating what their goals are and what they should be and what their investment alternatives are. So in spite of what's happening with AI, this is still a very attractive career. This is some data from the Bureau of Labor Statistics, which looks at every profession out there, every job out there, and estimates what the outlook is going forward. And so the Bureau of Labor Statistics estimates that the outlook is strong for financial advisors, that over the next decade it should grow by about 17% in terms of the number of people that are needed. They provide some information on the median pay. Median, keep in mind, is the middle. When you have a median, basically it means 50% are over, 50% are under. So the median pay that the Bureau of Labor Statistics estimates for personal financial advisors at about $102,000 a year, which is pretty decent. But keep in mind, that's an average across everybody. There are going to be some that make a lot more. Obviously, at the entry level, you're going to make less when you're first starting out. If we look at a higher level, somebody who is really practicing in this business as a very serious professional and has achieved some credentials to demonstrate that. The Certified Financial Planner designation is managed today by the CFP Board, and the CFP Board does a study periodically on the outlook for certified financial planners. And their most recent outlook shows that the median compensation for certified financial planners is about $185,000, so substantially higher than just a generic personal financial advisor. They typically earn 13% more than other financial planners. They tend to work for firms or have their own firms that provide a variety of other benefits. And most CFPs are fairly highly satisfied with their careers. So a pretty strong outlook, whether you look at the BLS sort of basic data for every financial advisor, or you look at something like the CFP Board, which is a more professional credential and a higher level that shows you've achieved something more than just a generic personal financial advisor. This breaks the compensation down in a little more detail because that 185,000 is the middle across everybody who's practicing as a CFP professional. Obviously, your years of experience are going to matter. So someone with less than 5 years of experience as a certified financial planner earns on average median 107,500, 5 to 10 years close to 150,000. When you get up to over 20 years, the median salary or total compensation is about 359,000. It also depends on how big a practice you have and whether you're supervising others. They show some data there. If you're supervising 5 or more staff, then the median compensation is about 400,000. It also depends on how you practice. You might be working for a registered investment advisory firm. You might be working for a bank, a broker-dealer, a brokerage firm, or a hybrid, which is one that's typically a mix, maybe an RIA as well as a broker-dealer. And the median compensation at all of those varies between $160,000 and $220,000. So pretty attractive opportunities for certified financial planner professionals. This is another study from CFA Institute. CFA Institute is the Chartered Financial Analyst designation. That's another professional designation. And I'm going to talk more about the CFP and what's involved there and what the topics are, and then the CFA, how that differs in a few minutes. But just to give you a flavor, another study on compensation, a chartered financial analyst is also someone who provides investment advice. They may work in either an institutional role, where they may be working for a pension fund or a hedge fund or a mutual fund or an ETF, or they might be providing private wealth advice to individuals similar to a certified financial planner. But similarly, they studied the CFA Institute, which is based here in Virginia, studied how CFAs do financially, and the median base salary for all CFAs is about $178,000. Some are getting bonuses, other incentives. The average total compensation for a CFA median is about $250,000. Also, quite attractive as a career path. So I've mentioned the word profession a couple of times here. The BLS data, again, is for a personal financial advisor. Anyone can be a personal financial advisor. You don't necessarily have to have a degree. You don't necessarily have to be certified in a particular area. Depending on where you're going to practice, you may have some regulatory requirements. But a lot of people practice in business as something more akin to a trade as opposed to a profession. A profession is really a higher calling. It's not just a job. When we think about professions, we often think of doctors as professionals, CPAs as professionals, lawyers as professionals. Clergy is also one of those that's categorized as a profession. But in personal financial planning and wealth management, a lot of people truly practice as professionals, which means they typically have fulfilled the 3 E's. They have a very strong education, and that includes some initial requirements to get the initial education they need to practice, and then staying current through continuing education. They typically have to demonstrate that they have a certain level of experience in terms of the number of years that they've actually practiced in this profession. And then they need to continue to practice to maintain their currency, to keep up to date. And then the third E, which is equally important, is that they have a code of ethics that they have to follow. So organizations like the CFP Board, the CFA Institute, have very stringent codes of ethics that you must follow as a professional. So you need to fulfill the education requirement to show you have the knowledge. You need to have experience to show that you've actually done this. but then you also have to follow a certain set of rules. So these three things make up a profession. And oftentimes, what people do to demonstrate that they're working as a professional is to get certified. So in all of these cases, it's good to have a college degree first. And in fact, a college degree is typically required, not always, but typically required. But to go beyond that and become certified, uh, you basically go through a process where you demonstrate that you have the knowledge, you have the experience, and you're following the right code of ethics. And then you're allowed to put letters after your name, such as the CFP and the CFA. So let's talk a little about these different designations and what types of knowledge areas they cover. To give you a little bit of background to help provide some perspective here on these different designations, I started my career 40 years ago as a certified public accountant, did my undergraduate degree in economics, my master's in accounting, and started working as a CPA. I was a senior tax consultant with Deloitte, primarily doing tax planning for individuals and their closely held businesses. And when I was visiting with these individuals and their families, I would often get investment questions. And I realized that while I knew a lot about taxes, and I could certainly understand a balance sheet and an income statement, I wasn't all that knowledgeable about investments. And so I decided I needed to get some more knowledge. And so I decided to go through the CFP program. At the time, 40 years ago, there were not college degrees in personal financial planning. And so I did a self-study distance learning program through the College of Financial Planning, which ultimately then led to the CFP Board being created. So basically, the College for Financial Planning then passed over to the CFP Board the rights to the CFP exam and ensuring the certification. But what that program does is it gives you a broad knowledge base in all aspects of personal financial planning. So it covers things like professional conduct, that's your code of ethics. It covers the principles of financial planning, things like creating and evaluating a set of income statements for a family, looking at their balance sheet, looking at their cash flow statement. It covers insurance. How do you make sure that the family is protected in things like life insurance and health insurance and home and car and other types of insurance? It covers investment planning. So it goes into a lot of information about the different investment strategies, different asset allocations. It covers tax planning. It covers retirement savings. It covers estate planning. It also covers today, it didn't when I took it 40 years ago, but today it also covers the psychology of financial planning because we are dealing with individuals, humans, and they have hopes and dreams and fears, and they don't always behave rationally. So it's important to understand people's psychology to help counsel them and help them avoid behavioral biases. So it's a very broad curriculum that really covers all aspects of what you need to know to help a family determine what their goals are and then develop a plan to help them achieve those goals, and then implement it and then follow up and make sure it's on track and then revise it periodically. So the CFP program is designed to train you in all of those aspects. Now, today, we do have college programs. So here at George Mason University, we have a bachelor's program in business with a concentration in personal financial planning and wealth management. And we are registered with the CFP Board that we cover these knowledge areas so that somebody who goes through our program has a head start and is actually eligible to sit for the CFP exam when they graduate to become a certified financial planner. So a little bit more about that. So the CFP Board today is the only organization, at least in the US, that grants the CFP designation. There are other CFP boards in Canada, Singapore, other countries around the world, but in the US, the CFP Board, which is in Washington, D.C., administers the exam and grants the rights to an individual to use the CFP marks. There are a lot of requirements to be a CFP, similar to what I talked about earlier in general. So there's an education requirement. You're required to have a bachelor's degree. And in particular for the CFP, you have to have completed your financial planning coursework at a program that's been evaluated and registered with the CFP board, such as the one here at George Mason. You also have to pass an examination. The examination is a single exam. It's 2 3-hour sessions, 170 multiple choice questions, so a total of 6 hours of an exam. And after you've passed the exam, you still can't call yourself a CFP. You have to actually accumulate 6,000 hours of professional financial planning experience, which is 3 years. Typical work year is 2,000 hours. There are some accelerated pathways where you can trim that down to 2 years of experience, but you have to have the education first. That makes you eligible to sit for the exam. You have to then pass the exam, and then you need to get the experience. And you can get the experience before you finish the exam if you like, but in total, you have to have the education, the examination, and the experience. You also have to pass a background check and agree to follow the code of ethics. If at any point in time you're found to have done something bad and violated the code of ethics, they can take your CFP away. So you don't have the right to use it for life. It's something that you have to renew periodically by showing that you're keeping up to date, that you have continuing education, and then you're able to put the letters after your name, certified financial planner, which shows families and individuals that you are qualified to provide them with financial advice. So how do financial planners work in what types of businesses? They might work as a financial planner or a wealth manager, providing overall financial advice for individuals. They might work in private banking. They might work as a personal financial advisor, advising on in individual areas such as investments or insurance or tax or retirement planning. They may do a little of everything, as well as I mentioned earlier, doing a holistic overall personal financial plan. They might work with attorneys as an estate planning specialist. They might work for a retirement plan, such as those in the Virginia system. If you are a faculty member at the University of Virginia, you can participate in a retirement plan with the state of Virginia, and they have CFPs that work there or work for the university to help advise faculty and staff who are looking at their own retirement. You might work in a small business as a family office advisor, helping families and family offices, very similar to what I was doing early in my career. So just to give you a flavor of what financial planners do, this is some financial planning software that a lot of financial planners use. This particular one is Right Capital. There's a number of different software products, but you basically help work with a family to help determine what are their goals. Typical goals are having a certain amount of money to be able to retire with a certain standard of living, helping provide college for our kids, college education, making home improvements, vacation home, planning to help loved ones who may need assistance in their later years. These are all types of goals that clients have, and we help quantify those goals, and then we help develop strategies to help people achieve those goals. This is an example, sort of a summary of a plan where you go through and you do what's called the Monte Carlo analysis based on here are what the goals are, here's how much money they have, here's a suggested or recommended asset allocation investment plan, and then you calculate the probability that they'll be able to meet all of their goals that they've established. In this case, we have close to a 90% probability of success for this hypothetical client, which is pretty good. you don't know with certainty what's going to happen in the future, so you're never going to be 100% successful, but you want to have a plan that has a reasonable chance of success or possibility of success. And then you want to reevaluate it each year to see if it's tracking, if they are on track to meet their retirement goals, their educational goals, and those types of things. So the CFP covers financial planning at a fairly broad level. There are other designations that I want to talk about that go a little deeper in some areas. So the reason that I took the CFP was to get that knowledge of investments, and it did a very good job. So I was able to basically shift a little bit to where I was doing both tax and financial planning. I actually ended up going to work for a smaller CPA firm, a regional CPA firm, where we had a financial planning organization as well as a traditional CPA practice. And I headed the tax department and then interfaced with the financial planning sister company to do financial plans for clients. And that was great. So I had the knowledge to do that, having gone through the CFP program. Later, I actually started teaching, decided to get my PhD, decided to drill down a little bit more in investments. And I ultimately decided I needed to know even more. And so I decided to look into the Chartered Financial Analyst examination, which is a very deep study of investment. So the CFP is fairly broad. We call this the education T, the top being the breadth, and then drilling down is the depth. So the CFP is a fairly broad credential. The CFA does not cover income taxes or estate planning. It doesn't cover budgeting and those types of things. The CFA is strictly focused on investment. So it provides you with the depth, but not the breadth of education in financial services. So these are the topics that are covered with the CFA program. Very similar to the CFP, ethics is incredibly important if you're going to practice as a professional. So there's a separate set of standards that CFAs have to follow. They have to study quantitative methods, business statistics, how to evaluate distributions of returns and those types of things. You have to study in detail economics, analyzing financial statements of companies. If you're analyzing individual stocks or bonds, you have to understand different corporate finance topics and the different types of debt and equity instruments. You need to understand derivatives. You need to understand alternative investments. So you have stocks and bonds. You have then derivatives, which are things like stock options and futures. You have alternative investments, things like investments in private equity or private debt or hedge funds, real estate. All of those are considered to be alternative investments. So you have to study a lot of different financial instruments, and then you have to study how to put them all together in a portfolio. And the CFA looks at building portfolios for institutional clients, trust, pension funds, but it also looks at building portfolios for private individuals, private wealth management. So again, very in-depth on investments, but it's going to miss some of those areas like tax planning, retirement planning that you would get in the certified financial planners designation. A lot of folks do both. I did so that I would have both perspectives, but they're not necessary. One or the other is typically sufficient to practice in this profession. In terms of the CFA program, you also have to have a bachelor's degree. You don't have to take it at a particular institution, though. As long as you have any bachelor's degree, you can sign up to sit for the CFA exam. You are better off going through a program that has a similar body of knowledge. And so George Mason has programs that are aligned with the CFA program as well. And those will help prepare you for it, or you can do self-study. The CFA Institute will send you the books you need, you study them, and then you have to go through a series of exams. There's actually 3 exams here. It typically takes 2 to 4 years to earn the CFA. It's not one exam like the CFP where you can finish it a year after graduation if you've already gotten the educational requirement. The CFA will take you 2 to 4 years. You have to first pass level 1, then level 2, and then level 3. It's each exam is basically 6 hours, so a total of about 18 hours of examinations over 2 to 4 years. And you can't go on to level 2 until you pass level 1, can't go on to level 3 until you pass level 1 and level 2. Very similarly, you have to have experience, so you have to have 4,000 hours of experience in order to actually use the designation. So you can actually start the CFP and the CFA while you're still a student, and then you can get the experience afterwards. So you can go ahead and pass the exam. At least for the CFA, you can pass level 1 as an undergraduate. You can't take level 2 until you've actually completed the bachelor's. But once you've passed all 3 levels, you can have your experience come before or after you pass the exam. So what do CFA charter holders do? They typically work as either research analysts or portfolio managers. They might be managing mutual funds, hedge funds, private client portfolios. They might be working in some of the same types of positions that a CFP are in investment banking, a chief investment officer, a relationship manager, a private banker. All of those are possible. They might also be risk managers, or they might be working more in an institutional setting for a mutual fund or a pension fund. If you've got both, the CFA and the CFP, you're typically working as a senior wealth manager, serving ultra high net worth clients. You might be working as an executive in a family office, a chief investment officer. You might be a consultant, professor, educator. It's quite common. Or you might work at a high level at a registered investment advisory firm. And you'll often see at firms, for example, registered investment advisory firms, you typically will see most of the folks there have CFPs. And typically all of the people that are dealing with clients have that knowledge in all of these broad areas. So they can counsel the individuals on taxes and investments and everything, but they will typically also have some CFAs as well that may be helping the CFPs in terms of drilling down into analyzing the performance of particular funds or particular investment managers. So there's typically more roles for CFPs than for CFAs, but there's roles for both at firms like registered investment advisory firms or broker dealers. Now, we can go a little deeper if we like. So the CFA covers investments fairly deeply, but if you think about it in the context of just investments, it's fairly broad because you're studying stocks, bonds, derivatives, alternative investments. In some cases today, some investors are putting significant percentages of their portfolios in alternative investments. Again, private equity, private debt, hedge funds, perhaps different derivative strategies. They might be invested in real estate or real estate investment trust or other types of infrastructure. Those are all considered to be alternative investments, and they're to some extent unique. They're different than just investing in stocks and bonds. And so they require a little bit more knowledge in that area. So if you do want to drill down and learn more about that, you can consider the CAIA, the Chartered Alternative Investment Analyst designation. So has a body of knowledge very similar to the CFP and the CFA. Not surprisingly, the first topic there is professional standards and ethics, very similar to those of the CFP Board and the CFA Institute. You have to study real assets, things like real estate and commodities, private securities, that includes private debt as well as private equity, hedge funds, structured products. Those are financial products, investments that are put together typically using derivatives. That's why we call them structured products. You have to understand complex strategies, managing volatility. You have to understand risk management. And in particular, you have to be knowledgeable about due diligence. How do you really evaluate how a hedge fund is doing? How do you evaluate how a real estate deal is structured? So you are typically evaluating investment managers that are managing these individual types of securities. Someone who goes through the CAIA program is not typically working at a hedge fund or a real estate fund. Typically, what they're doing is they're managing a portfolio that includes alternative assets. So you have to learn how to evaluate those types of assets. You learn some of that in the CFA program. You don't have to be a CFA though to do CAIA. You can go right to the CAIA exam if you have an interest in alternative investments. So it's going to drill down deeper in the subject than the CFA exam or the CFP exam. The CAIA is a little different in that there's no specific education requirement. Most folks who sit for it do have a bachelor's degree. It's a self-study program, so you sign up for the program, they will send you the curriculum. If you're interested in the topic, take some courses when you're at the university. So if you have a course in alternative investments or private equity and you're interested in that area, consider sitting for the CAIA exam. There's two levels, so similar to the CFA, there's two examinations. You have to pass level 1 before moving on to level 2. You can typically finish your CAIA in 1 to 2 years. So it's a reasonable amount of time in order to finish the CAIA. So what are your common roles? You might be working as an investment analyst. Typically, you're doing due diligence on other managers. Typically, you're in a situation where you're helping manage portfolios that include alternative assets. It may be that you work in a role that you focus strictly on alternative assets, or you might work on the overall allocation between stocks and bonds and alternatives. The CAIA charter holder, you'll also see folks working in risk management positions. You'll also see them working in private wealth funds or firms that are managing money for individuals where a significant portion of the portfolios are being allocated to alternative investments. So I hope this gives you a flavor of the outlook for financial planning and wealth management in general, and then more specifically, what some of the credentials are that you might consider. I'm certainly happy to talk to anybody who has an interest, so track me down, Tom Robinson at George Mason University, and be happy to answer any additional questions you might have. Have a great day.